Hello, this is your daily dose of financial market trends. The U.S. Treasury just launched a bond buyback program in a $32 trillion market, and the ripple effects are already showing up in a weakening dollar, surging Bitcoin, and rising gold prices. Heading into today's session, yesterday's close showed broad weakness across the board. The S&P 500 finished Thursday at 7,641, down nearly 0.9%. The Nasdaq dropped a full percent to 26,067, while the Dow fell 1.3% to 52,759. Interestingly, the VIX actually declined 3.5% to 15.44, suggesting investors aren't panicking despite the sell-off. The 10-year Treasury yield climbed to 4.7%. Let's dive into what's driving market attention today. The S&P 500 ETF, ticker SPY, is topping our buzz score with chatter coming from multiple directions. Yesterday's nearly 1% decline is generating significant discussion across social platforms, with mention activity spiking sharply. It's not just retail investors watching this closely. Broader geopolitical concerns are putting pressure on the index, and when the benchmark wobbles, everyone pays attention. This feels like one of those moments where the market is digesting multiple cross-currents at once. Broadcom is showing up with a strong buzz score thanks to a unique combination of factors. The semiconductor giant posted a small gain yesterday, bucking the broader market trend, while news about Samsung's capital return program is creating positive sentiment in the chip sector. More importantly, Broadcom reports earnings on September 2nd, and traders are starting to position ahead of that date. With AI chip demand still the dominant narrative in tech, any major semiconductor report carries outsized weight right now. Alibaba is catching attention after announcing it's selling Lingxi Games, raising questions about the company's strategic priorities. The stock climbed over 1% yesterday on volume that ran 2.5 times the average, suggesting institutional players are repositioning. The headline everyone's asking: is artificial intelligence now Alibaba's only real focus? For a company that's faced regulatory headwinds and growth challenges in its core e-commerce business, a pivot toward AI infrastructure could represent a meaningful strategic shift worth monitoring. Finally, both Bitcoin and Ethereum are lighting up across news feeds and trading desks. Bitcoin jumped over 5% with volume more than double its normal pace, while Ethereum gained nearly 2% on similarly elevated activity. The timing here matters. This crypto strength is happening precisely as the Treasury launches its bond buyback program and the dollar weakens. Investors are treating digital assets as an alternative store of value when traditional monetary policy gets unconventional. Whether this rally sustains depends entirely on how bond markets respond to the intervention. Three macro scenarios are shaping market probabilities right now. First, the U.S. Treasury bond buyback program. Treasury Secretary Bessent has initiated direct intervention in the bond market, and it's already weakening the dollar while lifting alternative assets. The bull case, at 35% probability, assumes the buyback successfully reduce long-term yields without sparking inflation fears or damaging dollar credibility. If that happens, Treasury volatility calms down, long-duration bonds rally, and growth stocks benefit from lower discount rates. The bear case, at 45%, envisions bond vigilantes fighting back by aggressively selling treasuries, viewing this as fiscal dominance that compromises Fed independence. That would spike long-term yields despite the buybacks, trigger a broader repricing of risk assets, and send investors scrambling into gold and crypto as inflation hedges, while the dollar decline turns disorderly. Second, Bank of Japan rate normalization. Rising inflation in Japan, particularly in food prices, is forcing the central bank to consider further rate increases. The bull case, 40% probability, sees measured, well-telegraphed hikes that allow orderly unwinding of yen carry trades. Japanese equities would dip initially but stabilize, while U.S. tech faces only modest headwinds from reduced institutional flows. The bear case, 25%, imagines inflation forcing larger than expected hikes that trigger rapid yen appreciation and force deleveraging globally. Hedge funds would unwind carry-funded positions across U.S. equities and emerging markets, spiking volatility and hammering highly leveraged growth stocks and crypto. Third, Fed rate cut expectations revision. Investors are scaling back bets on rate hikes, while President Trump publicly calls for lower rates, creating tension around Fed independence. The bull case, 35%, assumes economic data justifies cuts independent of political pressure, allowing the Fed to ease while maintaining credibility. Rate-sensitive sectors rally, small caps benefit, and the dollar weakens in an orderly way. The bear case, 30%, sees the Fed either capitulating to political pressure despite sticky inflation, or staying hawkish and triggering severe contraction. Either path damages credibility and tightens financial conditions sharply. On the housing front, 30-year mortgage rates are sitting at 6.67%, while inventory has climbed to 9.3 months of supply, well above the balanced market threshold. Home price appreciation has slowed to just over 1% year-over-year. Unless the Fed delivers aggressive rate cuts to push mortgage rates materially lower, the housing lock-in effect will likely intensify. Looking ahead to earnings, NVIDIA reports next Wednesday, August 26th. Given the AI infrastructure narrative driving markets and NVIDIA's role as the bellwether, this report will carry significant weight for the entire tech sector. Let me leave you with 5 things worth watching. First, Treasury intervention introduces genuine uncertainty into the bond market. Monitor long-term yields closely to see whether the buyback program calms volatility or provokes resistance from institutional sellers. Second, the dollar weakness and crypto strength correlation is no coincidence. If unconventional monetary policy continues, alternative assets may see sustained inflows as hedges against currency debasement. Third, the semiconductor sector is showing relative strength ahead of major earnings. Broadcom's resilience and NVIDIA's upcoming report could set the tone for whether AI demand justification remains intact. Fourth, housing affordability remains severely constrained at current mortgage rates. Without Fed cuts pushing rates below 5.5%, expect the lock-in effect to keep existing home sales muted and inventory elevated. Fifth, the Fed is caught between political pressure and economic reality. Watch for any signs the central bank is losing independence or credibility, as that would fundamentally change how markets price risk. As always, this is educational content, not financial advice. Do your own research and consult a professional before making investment decisions. I'll see you back here tomorrow morning. That's your Morning Market Digest for Friday, August 21st. Trade carefully out there, and I'll catch you tomorrow with the latest.